Hello there. This is a classical example of how to trade binary options based on the euro-US dollar as an asset. As you very well know, when you trade binary options, you have a multitude of assets to be traded, but the majority of them are currency pairs. Now, this is the most popular currency pair. This is the euro-US dollar chart. As you can see, it is the 1 hour chart here. And you can trade binary options in two different ways. First of all, it should be mentioned that when you trade binary options, you can only buy options. But if you look for price to move to the upside, you are buying call options. And if you look for price to move to the downside, you are buying put options. This is different than when trading the regular markets, where if you want to go short or to look for the downside, you just sell. So on the binary option markets, you are just buying. Now again, this is the euro-US dollar. This is the 1 hour chart, and besides fundamental analysis that moves markets, there is also technical analysis. Technical analysis means looking at a chart like this one is and trying to find proper places to buy put options if you look for market to go to the downside, or to buy call options if you look for price to go to the upside. For example, here on this 1 hour chart on the euro-US dollar, what you see here is the previous highs. This previous high at the beginning of the year, price made a new high, but as you can see, it made a high, tries once, then failed, tried again and failed again, tried again and failed again, with 3 different lows. So these are being called this one here, and this one here, and this one here. These are being called lower highs, and because of that, you should be aware that they are coming in a pattern that is being called a contracting triangle that acts as a reversal pattern. So a contracting triangle that acts as a reversal pattern. What does it mean, reversal pattern? It means that price goes and breaks into the opposite direction than the previous direction the price made. So this would be your triangle. Triangle travels between the A and C, like this, and B to D trend line. By the moment the triangle is broken, so basically all you have to do is to project this trend line here on the right side and look for price to break this trend line. By the moment this triangle is broken, one can go and engage into buying put options, as this would be a bearish scenario. So price tried, failed, and then broken. Usually such a pattern is being retested, so waiting for a retest here might be the wise thing to do, but this is not mandatory. So this would be a nice place to buy put options. But then price moves and moves, and based on the fact that this move here, as you can see, resembles with a zigzag, this is being so-called a zigzag, like A, B, C, then you have an X wave here, and then price made a diamond formation, this is being called a diamond formation in terms of technical analysis. And the beauty of such formation is that it allows time to be taken into consideration. What do you mean by that? You mean that if you look at the market from the moment that you have this spike here on the left side and on the right side, by the moment that the time on the left side projected on the right side expired, then you look for a break, and therefore a proper place to buy call options will be by the end of this diamond. If you go, this is a 1 hour chart, but if you go on the bigger time frames, you will see that this is being part of a contracting triangle of a bigger degree that should have a B wave here and a D wave here. So this trend line should be considered. And if you decide that your expiration date for the calls or for puts that you want to trade should go for the medium to long term, I mean, when you trade binary options, you also have possibility of trading end of week or end of month, then you should be aware that such a triangle from the bigger time frames goes through this area. So this to be something like wave A, then a B wave to the downside, a C wave to the upside. Now, all buying calls or buying puts around these levels, you have to choose an expiration date. Because this is a 1 hour chart, it doesn't mean that you have to choose mandatory short-term expiration date. You may even go end of day. Maybe this break here has been at, I don't know, 9 o'clock in the evening, so end of day will mean only 2 hours. So you are not supposed to stay with the option open for the whole day. It depends very much also on your strategy to trade. If you decide to trade binary options and you have a specific amount divided into different multiple entries, and then by the time you have such a break, you let's say deploy your entries, and you have different entries based on that. Moving forward, and by the time this triangle is making this leg here to the downside, then this is a so-called flat. A flat, it is a pattern, it is a corrective pattern, but if the prior moves was to the upside and then you have a corrective pattern in the sense of in the form of the ABC, by the time these highs are going to be broken, the logical thing to do is to go and buy call options. But taking into account the fact that this triangle comes from a bigger time frame, that the call option also should have a bigger expiration date, not hourly or something like that, but again, end of day would be appropriate. It depends very much on the time frame that your technical analysis appears. Now, trading can be made also based on indicators. If you go, for example, and you add an indicator here and you put the RSI, the RSI means relative strength index. Now, relative strength index is one of the most popular indicators or oscillators out there, and trading can be made based on it. Taking into account the fact that this is a contracting triangle, the general interpretation for this oscillator is that you should buy put options every time the oscillator comes above the 70 area here, because this is being viewed as an overbought area, and you should buy call options every time price is coming into the 30 area, as this is being considered as being oversold. As you can see, price reacts at these moments of time, but it depends very much on your expiration date. For example, this triangle, first of all, you have a support on the trend line here. Second of all, you have the support on the RSI here that is in the oversold area, and therefore these are proper places to engage into buying call options. Also, another thing to consider when you trade binary options and you are using the RSI, look to consider the divergences between price and oscillator. You look for, if price makes a low and then another low like this, then you look for the oscillator to confirm this. If the oscillator is not confirming, that is being called a divergence, and those divergences can be either bullish or bearish. For example, here the RSI makes a high. Let me make a mark here. This is a divergence. The RSI, the oscillator, makes a high and then a lower high, while the price makes a high and then a higher high. So price and oscillator are diverging, and there is a bearish divergence, because all the time with the analysis you need to stay with the oscillator. And therefore, what to do? Well, the logical thing to do is to go and buy put options here based on the divergence. This was just an example how to trade binary options with the euro dollar in this case and on the 1 hour chart, but this analysis can be made on any time frames and with actually any currency pair. Thank you for being here. Bye bye.